turning our attention back to Wall Street, we can see Disney right now doing much better after its earnings yesterday. And as you can see, we want to bring in Bernie McTernan, Rosenblatt Securities Analyst, who's joining us from Fairfield, Connecticut, to talk about how Disney is doing, especially with the announcement of, I think they're saying, 100 million streaming customers, not just Disney Plus, but Hulu and ESPN, with the potential to reach many more, 200 million by 2022?
Yeah, that's what we're thinking. So really, the key takeaway from last night is that they announced an investor day for streaming is coming in the coming months, and that they're going to launch a Star-branded international streaming service. So 3 things here. 1, at the investor day, we expect them to update their Disney Plus subscriber guide and profitability expectations. They're already at the low end of that subscriber guide that they expected to hit in 2024. And on profitability, they expect to be break even by 24. We think that's going to happen by 22. Second, on the Star-branded OTT service, this is significant because we think this, along with the continued expansion of Disney Plus globally, is going to drive that next 100 million subscribers. You guys have in the graphic before how they currently have 100 million subscribers. We think that could be 200 million subscribers potentially in fiscal 22, depending on when they launch this Star-branded service. Why that's significant is because we expect Netflix to end the year at 200 million subscribers. As of last night's close, Disney was at consolidated Disney traded at a 5% discount to Netflix's market cap. And third, and this is really significant for what's driving this huge stock price reaction today for Disney, is that this is a stock that lacked a lot of positive catalysts. And the bears and the shorts could point to parks and the coronavirus and the losses and investments the company was making. Well, this is them really continuing to put all their chips in the middle of the table. And we think this investor day that's coming in the coming months is going to be another positive catalyst for the company, similar to what happened last April, which drove the stock from $100 on its way to 150. So we still think this is a compelling time to own shares.
Bernie, all of this is well and good, but I just want to ask you about 2 things. 1, streaming stuff doesn't make any money, isn't going to make any money for a little while, and parks are still dismal, right? And not only are they dismal, yes, you could argue we're going to see an improving trajectory, but Bob Chapek also said that cancellations at the parks were higher even than they expected it, and they didn't have high expectations, right? So the parks business is a big albatross at this point and looks to be for the foreseeable future. Why isn't that a bigger issue for investors today?
I think it's striking. You're certainly right in terms of the forward-looking commentary on demand trends weren't great. We don't expect a big sequential improvement in adjusted or segment OI losses to come at the parks next quarter. We don't think you're going to get back to prior levels of segment OI until 2022. And to know how conservative that expectation is really depends on when you think a vaccine is going to come or not. So I think, though, that really people are embracing streaming, and that's because this is a positive leg of the story. We think they're going to be making money in streaming soon in 22 for Disney Plus. They expect Hulu and ESPN Plus profitability to improve in the fourth quarter as well. So streaming is a scale game, and that's why they are still early in the total scale opportunity here.
Bernie, Ness here. And what do you make of the company announcing that it's going to put Mulan on Disney Plus? I mean, it had been delayed, and putting it for about $30 a rental. They're not really. This is a testing of the price point, correct? And could you see other movies, Disney doing the same with other movies?
Yeah, I think this is a great experiment for Disney. They clearly, you can see with them and Warner Brothers with Tenet, no one wanted to be the first one to hit the box office, and they kept on pushing back the release dates. So this was Disney really pulling the plug, saying they don't want to be the guinea pig. And now, instead of let's testing what the ROI will be on box office content in a coronavirus, let's test what the ROI is on premium VOD. So I think this is a really interesting experiment for them. I still think once the box office gets back to form eventually, the theatrical window will still be more profitable for them than the PVOD window, just because of their focus on blockbusters. That could be different for other studios, but remember, Disney, its big tentpole tentpole films that drive massive audiences. So it's still unclear if PVOD can drive those same audiences, but it's a great experiment for the company, and certainly gives them optionality going forward.
Bernie, I want to get back to the point that Julie made, which is the mix that we've known Disney for simply isn't there right now, largely because of the pandemic. The 85% drop in revenue from the parks. You talk about the content side, the movies that are usually the big drivers. I mean, the positive story is the streaming, and I take that point, but is that really what the play is for Disney right now? For investors, is it time to maybe re-rate the stock, given that we're not likely to see the bounce back from what has traditionally been their main revenue driver for a while?
Yeah, and this is something that the company's been working through, and I think that with the parks, you have to take the long view. And if you're someone who thinks that parks is no one's ever going to go to the theme parks again, then honestly, this probably isn't the stock for you. But we think the parks will get back to prior levels of profitability at some point. We have in 2022, and then while all this is going on, they're building this massive asset. With Disney's, the 3 core streaming services going to 4 core streaming services, and they're going to be a global juggernaut. And I think that's really should be the focus here, and that's clearly what investors are reacting to today.
All right, Bernie McTernan is Rosenblatt Securities and an analyst there. We appreciate your being here.